Hi, folks. This is Sean Hyman from Chart of the Day, and I just wanted to go over a couple of things that happened today. These aren't something to trade off in the here and now because you'll be seeing them later, but I want to point to them as lessons of things to keep and be mindful for in the future. As you know, I've been bullish on a couple of the commodity dollars, the Aussie dollar and the New Zealand dollar. New Zealand's interest rate decision came out today. It had 2.5% held steady, as was expected and as was previous. However, there's always a press conference and a statement put out by the Monetary Policy Committee, and this was rather bullish. They talked about raising interest rates by mid-2010. And really the way they're talking about certain aspects of their economy growing and inflating, there's many speculators out there and traders thinking about that they could raise interest rates as soon as March. So that was a very bullish time for the New Zealand dollar, and we'll look at that here in a minute on a chart. And then later on this evening, there was the Australian employment and unemployment numbers. And as I've been saying for a while, Australia's numbers are very bullish. It's the economy that on a macro level has the best fundamentals. They have the only positive GDP out of the whole G8 nations. They have growing inflation now. They have a lot of their most important exports, such as gold, copper, iron ore, you name it, heading north in a major way. So they've got a lot going for them. They were actually one of the few major economies to completely dodge a recession in the global recession. Now they came somewhat close to it, but they definitely dodged it. Their GDP never went negative for one quarter. And so also earlier in the week, I believe, the job advertisements month over month for Australia came in far better. Previous it had been a negative 1.7%. This time it was a 5.2%. So there was a lot of ads out there for people to get jobs. I mean, think about how it's been in the UK and much of the Eurozone and Japan and in the US, particularly in the US and Eurozone. You know, you've got inflation around 10%. And Australia's employment numbers are about half that of what ours are, around 10%. And so with their economy dodging a recession, with them growing a lot, with the earlier in the week job advertisements being boosted, and with their recent speech from their central banker that was so upbeat and bullish just a couple of nights ago, I was really anticipating that the Australian dollar would do rather well across the board. And see, when you set yourself up in following and buying into some of the strongest fundamental pairs, then you set yourself up to take advantage and to be in those trades when these upward surprises happen. And that's my main point, is that when you buy fundamental strength, it's a lot easier for there to come times where the fundamentals actually exceed what expectations are, and those are when you're going to already be in the pair for some nice pops, and I'm going to show you some example of that here in a little while. But the last period, previous months, got upwardly revised. That number was revised to upward to 27.2. They were expecting 5,300 jobs this time, so a very meager addition, but nonetheless still an addition, adding jobs, which is, you know, more than most can say. I mean, hey, we got excited here in the U.S. when we just lost 11,000 jobs. In other words, we're still losing jobs and getting excited about it. So there's been no job creation in the U.S., yet there has been in Australia for months now. There was 31,200 jobs created for the month. The unemployment rate had been at 5.8%. Again, you know, practically half of what we have here in the U.S. And that expected it to notch up to 5.9%. I laughed when I saw this number because I felt if anything it would hold pat or shrink. And sure enough, what did it do? 5.7%. So that shrank, which is better, of course, anytime the unemployment rate goes down. And so looking at all that and taking all that into account, I want to take a look at an Aussie pair and a New Zealand pair. This is Aussie CAD on an hourly chart. And I mean, this thing, once this announcement happened, you know, it popped huge here. You can see with just in a couple hours, boom, boom. And so just an enormous pop there. Let me blow it up a little bit higher. So within just a handful of hours, we've come from 95.50 to 96.50 on a pair that's not even known for being terribly volatile. Then we've got the New Zealand numbers. Remember we said that New Zealand came out with the same interest rate. In other words, they did not raise interest rates, but their speech, their statements that came out were of a bullish nature. And so since they talked about the thought of raising rates by mid next year, that was bullish. They also talked about a lot of things that were upbeat in the economy as well. And so this one went from below 171 within hours up to above 72, 72.42 at the moment. So this thing got a huge pop up here. But anytime you can align yourself with the higher inflationary countries, with the ones with the higher interest rates, the ones with the positive GDPs, etc., you put yourself in a place to take advantage of more of these upward surprises. And there's no way beforehand that you can know from a technical charting standpoint necessarily that those are going to happen. So that's one reason why I blend fundamentals and technicals. I'm just as much on technicals as fundamentals, just as much on fundamentals as technicals. But I am not of the belief that they conflict. I'm of the belief that they actually complement each other. And so the fundamentals can get you ready for and tell you things to get into. So it tells you what to get into, what pairs to buy, what currencies to focus on. And the technicals tell you when are the better times to enter those trades. And also when you know you're in a strong fundamental currency, typically the longer you can stand to stay in its trend, usually the more opportunity you give yourself for these upward surprises to happen, like what we saw in the Aussie CAD, like what we saw in the New Zealand dollar, and pretty much any other New Zealand or Aussie pair experience that same. This is just two that I happen to have up on the chart and been watching. So hope you learned something today. I hope that's been beneficial to you. You've been getting a lot of emails to people saying how much they've enjoyed the charts of the day, how much they've enjoyed them and learned so much from them. I appreciate all those comments and compliments. I really do. I do put a lot into these, and really in my heart of hearts to try to teach you quite a bit. So I'm glad to hear that time that I put in has been paying off. Thanks so much. Bye-bye.